Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance that is now turned support here. Now, as the market is testing previous resistance turned support, we could expect a potential rejection to the upside away from the area. In fact, from here, this is the first time that the market lately with the recent price action respected this area as resistance, creating this red candle here. After that, we had the break above the zone with this green candle, and that turned this area from resistance to support, which the market is currently testing and from which bullish price action could be expected. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, this area can be identified even more precisely. In fact, we can see how exactly from here this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it. Here, we had the creation of this red candle, showing how a lot of sellers were entering this market exactly here. However, buyers in this case had the best and managed to break above the resistance, creating a change from previous weekly resistance to now weekly support, which is in fact the level that the market is currently testing. Now, we can also notice that in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which is currently testing exactly the 0.786 of the Fibonacci taken on the weekly impulse, which is a quite strong level of weekly demand and support, which we could in fact expect this market to reject to the upside. Now, dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can see is that we have a market which is currently testing previous daily support, which is now turned resistance. This area was acting as previous support here, again support here. All this previous support is now turned resistance at this level. So what we could expect at this point is a potential break above this previous daily support, now turned resistance, because only if we get a break above this zone, only at that point more bullish price action could be expected, because until the market will remain below this resistance, it can easily continue to the downside and create more bearish price action for a deeper test of that weekly support or even a break of that weekly support. So it is very, very important to wait for a break of structure in order to confirm that buyers are once again in control, because at the moment there is clearly bearish structure here on the daily time frame. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, what we can see is that with the last reports, net positions have been increasing quite aggressively. We went from having the low at minus 24k net positions with way more shorts than longs. In fact, we had 52k shorts compared to only 28k longs from an institutional perspective, to now having plus 12k net positions. So completely the opposite, with more longs than shorts. In fact, we have 77k longs compared to only 64k shorts. Now, keep in mind that if we're checking the data for the pound, we're actually already checking GBPUSD, because all currencies on the spot are traded against the USD. So by checking the data on the GBP, we are actually already checking GBPUSD. And if we move back here to the technicals, what we can notice is that if we actually get a successful break above this level, There is the possibility on the retest to see even more institutional longing inside of this zone, since at that point buyers would be once again in control of this market, and on the daily time frame we would once again have a bullish structure and a bullish market. Now, I did speak about GBPUSD quite a few times in the past. I spoke about it after this impulse and correction. From here I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside. Then after this break and correction, from here I made another breakdown explaining all the reasons for which we could expect the creation of a higher high. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, as I was saying previously, until the market will remain below this level, it can easily continue to the downside. However, if we get a break above the structure on the retest, the way in which we could be approaching this is, as usual, being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you joined the mentorship program from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, this is the button from which you can join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.